You're watching Mining Headlines on mining.com. I'm Devin Murugan. Citigroup has slashed its short-term copper price forecast by 11%. The bank has cited potential U.S. trade tariff hikes under the second Donald Trump presidency and weaker than expected stimulus from China. It now expects copper prices to drop to $8,500 a ton over the next 3 months, down from its previous estimate of $9,500. This follows nearly a 10% decline in copper prices since late September. Analysts at Citigroup warned that Trump's second-term policies could disrupt global trade, while China's lack of stimulus has been a surprise. Meanwhile, a stronger US dollar driven by inflation concerns is also weighing on commodity prices. Experts say China must take further action to revive copper demand, but so far, the focus has been on restructuring local government debt, not direct stimulus. The Silver Institute says the global silver deficit is set to shrink by 4% to 182 million ounces in 2024. A 2% rise in total supply will offset the 1% demand growth. This marks the fourth consecutive year of a market deficit. Increased industrial demand and a rebound in jewelry won't help offset a drop in physical investment. Mine supply is forecast to grow by 1%, led by increases in Mexico, Chile, and the US, while recycling is expected to rise by 5%. Spot silver prices are up 32% this year, with exchange-traded products on track for their first inflows in 3 years. Now, Mali is demanding that Australia's Resolute Mining pay $160 million to settle a tax dispute following the detention of the company's CEO. Terry Holohan and 2 colleagues have been held in the capital Bamako since last week. The detentions come amid rising pressure from Mali's military rulers on mining firms to renegotiate terms. The government claims Resolute owes 100 billion CFA francs, or $162 million. Discussions have been ongoing about a potential payment plan, with the company reportedly asked to pay half now and the rest later. Resolute's stock price has taken a heavy knock since the news broke out. The company, which operates Mali's Nyama mine, has declined to comment. Mineral exploration spending is expected to rise only slightly next year, despite strong gold prices and U.S. President-elect Donald Trump's regulatory promises. S&P Global analysts warn a tight financing market will limit budget increases. Smaller miners key to finding new deposits will bear the brunt. Even with high commodity prices, junior miners are struggling to raise funds. Mark Ferguson of S&P says underfunding could hurt the entire exploration pipeline. Global exploration budgets for non-ferrous metals are set to drop 3% to $12.5 billion in 2024. Mineral Resources is closing its Bald Hill lithium mine in Western Australia due to a sharp decline in lithium prices. The move follows a broader trend of production cutbacks as the lithium market faces oversupply and weaker demand. The closure will result in 300 job losses, though a small team will remain to manage the site's transition. MinRes expects its final spodumene concentrate shipment to be completed by December. Shipments for fiscal 2025 are now projected to drop to just 60,000 tons, half of the previous estimate. The decision comes amid an ongoing probe into the company's CEO, Chris Ellison, following a controversial investigation. Well, that's where we leave headlines on mining.com for now. Bye-bye.